We want to create a strategy that no matter how bad our trade is, we always get out with a profit. See, it is not your ability to manage good trades that makes you a good trader. It is your ability to manage your bad ones. That's what makes you an excellent trader.
Thank you very much. Wednesday night, we've been doing these for a few weeks now, and I'm excited because we have been just getting tremendous results with some of the new strategies. And really what I want to do today is help people understand how the software works, the inner workings, the mechanics of the software, the logic behind it, you know, kind of have them understand how I come up with these strategies and how then they are imported into the software and how the software then trades for them. It's really it's like you said, and correctly so. It's an automated, fully automated process. Once the strategy is set up, then it basically trades. And as long as we're connected to the broker, the software looks for opportunities 24 hours a day. And when it sees and recognizes and identifies those opportunities, and it goes opens a trade. It manages that trade. And the software has a one-track mind, and that is to seek out profits in the market. And once it has those profits, then it closes those trades. It knows when to do it, and that's exactly what it does. Adds profits to the account. If the market wants to play games with us, in other words, doesn't want to cooperate, we work with protocols that we call trade recoveries, and I'll go over some of those as well. And rather than as most people do in trading, rather than taking a loss when the market goes against us, we figured out a way not to take a loss but turn a losing trade into a winning trading sequence. There's a whole process, and there might be a little bit of misconception as to what it really is, how it happens. Hopefully I'll be able to shed some light on that as well. So how does that sound? All right, I'm assuming everybody's
Hi Joseph, I'm sorry I have myself muted as well, but that sounds phenomenal. I know that's exactly why everyone is here this evening, so take it away.
All right, what I'll do, I'll go into I'll just go ahead and open an account actually right here. Let's just work with this one. This is a strategy that I've been working on for some time. It's a fairly aggressive strategy, relatively new strategy. I've had it running about two and a half months now, and we will be putting it up on the website in the next probably few days. So first of all, what you're looking at is obviously one of my personal computers. Don't really pay attention to any of this. This is my mess, and there's a certain order to my madness. We'll just focus on the software. Now you're looking at the dashboard or the main window, and this is where all of our modules are found. The harvester module, and I'll be going back to them, the open deals module, there's actually 11 of those. The broker window, which shows the existing live trades that are taking place, and basically this is what the broker is reporting. Then there's the closed deals. These are all the trades that the software had already closed. And basically, before we start, we want to make sure that you understand the whole concept of trading. We do not trade on the basis of indicators, technical indicators, or analysis of the market. We simply only look at the numbers, and we only look at price action, because ultimately everything is reflected in the price. It doesn't matter what the central banks of Japan is doing, or the Central Bank of Europe, or the Fed. It doesn't really matter. At the end of the day, what really matters is the price, because that's where we make money, in the market, and everything is ultimately reflected in the price. So our algorithms are designed to follow the price. Therefore, we do not need charts. Charts are used to confuse people, as far as I'm concerned, particularly amateur traders that are trying to figure out, or trying to outguess the market, where the market could potentially be going. And most of the times they're wrong anyway. It doesn't matter how many indicators they use. What we do, we have our own algorithms that determine the direction of the market, and they show us, the algorithms show us the direction of the market in the form of an arrow. And that arrow, there's only two types of arrows. There are down arrows, which are red, and there are green arrows, which point to the upside. And I don't think it really takes a rocket scientist to figure out what it probably means. If the market's going down, you will be getting a bunch of red arrows in that market. If the market's going up, you'll be getting green arrows. Simple as that. What I am looking at right here is 8 different currencies that we are currently broadcasting the signals, or the arrows, on, and we're not broadcasting the other ones because we don't have people trading those other ones. We can broadcast all of them, but currently we don't have to. Probably by the end of the year we will add 7 more, and we'll have a total of 15. But don't really take my word for it, and don't be hunting me down if that is not the case. I'm just anticipating that will probably happen. In the meantime, let's focus on what we're seeing over here. Let's just look at euro dollar. Everybody understands and knows euro dollar. That's this symbol over here. What we in the left-hand column, we have all the symbols that the software supports, and then the other columns from left to right are basically the time intervals of each and every arrow. So for example, if we wanted to know what is going on in the euro dollar market on a weekly basis, we would go across to the weekly column, come down, sorry about that, come down to the security being euro dollar, and we see that we have a red arrow. That means that the market is going down, and you can take this to the bank. This market is going down. If we wanted to know what is happening on the in the daily time frame, we see also that the market's going down. On the same thing on the 240 minute, on the 60 minute, it tries to go up a little bit. Same thing on the 5, 15, 30, and so on. Obviously, those of you who have traded or are traders will be paying a whole lot more attention to the longer term indicators, because they are more important in the overall scheme of placing a trade and focusing on long-term success, as opposed to the 1, 5, 15, 30 minute. They are really insignificant, and it's just really, for all intents and purposes, this is just noise in the market. What you want to look at is the weekly, daily, nothing less than the hourly. At least that's the way I have taught myself to trade, and the strategies that we use and utilize are many times based on some of these arrows. Now, how does the system generate an arrow? Well, we've got, as I mentioned, we have an algorithm that looks at the price and determines the relative price change. What was the price 5 minutes ago, and what is the price now? And compares it over a period of the last several several time frames. I'm not going to, for a number of reasons, because I don't really have time, go into the details how we calculate it. The bottom line is that's the way it is. If you wanted to drill down into each and every one of these arrows and determine how strong or how weak that arrow is, you would simply click on the right mouse button, and it will give you now the window will change into a numerical representation of what we call market strength, and this is a more detailed look at how strong that individual arrow is. So we measure it from minus 100, which is the strongest direction to the downside, to plus 100, which obviously would be in green, and that is the strongest market to the upside, and everywhere in between. So we have a total of 201 numbers going from minus 100 to plus 100 that tell us how strong the market is, and that's all we really worry about. We don't look at charts. So based on these numbers, we then go and determine how we're going to build the strategy. Now, many of you have had the opportunity to look at some of my some of the videos that and seminars that I have done on my philosophy and trading strategies, and so you understand what my beliefs are, how I trade, and with that in mind, I build each and every strategy having or putting all the components of a successful trading strategy into an automated trading strategy. And we do that in a module that we call the harvester. The harvester, what the engine is to a car, the harvester module is to Forex that. Because basically what we do over here, we create these mathematical formulas or algorithms that are designed to be called when a certain condition is present, and when that certain condition is present, we will cause an action. And the action could be something simple like start trading, open a trade, or close a trade, or take profit, or stop this trading sequence and start another trading sequence. So we build this into these individual algorithms that we call harvesters. For, if I say harvester, it really is our slang for algorithm. Now, what we're looking at, I already pre-built this strategy. This strategy over here consists of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right. 10 different algorithms, and each algorithm incorporates pound yen as the symbol or the currency pair that we'll be trading, and each one of these algorithms will be initiated based on conditions in the market. If the price changes adequately enough, then one of these or several of those, depending on how the price will be changing in the market, these algorithms will be initiated, activated, and they will start running and opening trades. And that's pretty much the concept. The idea here is that we do not open just one trade and now hope that the market goes in our direction. Obviously, it is a good, it works better for us when the market goes in the direction of the original trade, but we also incorporate what each strategy should have, and that is what we call trade recovery. If the market doesn't cooperate with us and goes against us, rather than closing that trade with a loss, as we were taught in all of the Forex trading seminars that many of us attended over the years, we have figured out, again, using these various algorithms to turn a trade into a winning trading sequence. So if the market goes against, say, the trade that was created by algorithm number 621, and the market goes against that trade, then this algorithm will call out another algorithm, which is an algorithm in the opposite direction, and that algorithm will do whatever it takes to recover from the losing trade, and it has 8 other algorithms available to help it along. So basically what we're doing, we're not just using one single trade to achieve our profit. We're using many different algorithms to create many different trades that we call a trading sequence, and then the ultimate goal is for the trading sequence to be ultimately profitable. And that's exactly what happens with each and every trading sequence, because our trading sequences are designed in a way where they close trades with a profit. There's just no other way. Now, so once we have these algorithms set up, okay, then we will set up our profit targets, and we set up the profit targets in the open deals window. I'll just open the global open deals window, which actually has all the trades from all of these other open deals window, and as you can tell, there's 11 of them. The master open deals window is the global one. We also call them the zero open deals window or global, and then the sub open deals window are 1 through 10. So, for example, I'll go back to the harvester. This particular harvester will be placing trades in open deals window number 1. If we open that window, we see all of these trades that the harvester had placed, and they are being kept track of in this particular open deals window, and that's just the way it's designed. So when we go back up here and open the global open deals window, this is where we actually set up our profit targets, and the profit targets are set up in this area right on top. So the most important function is the CAD, which stands for Close All Deals on Total Running Profit, and we set it up here at $2,000. This is this started off, I believe, let's just go back here. This started off on August 3rd as a $78,500 account. Okay? And our profit target in this particular strategy is $2,000. So what the harvesters are going to do, they're going to target a $2,000 profit. Once that profit is reached, then guess what? All the trades will be collapsed or closed and put right in here in the closed deals window. So let's just go into the history of the closed deals window, examine this particular strategy. This is just for the educational purposes only, so you kind of have a feel of what is going on here. So I'll go into the history. I'll move all of the pairs in here because it's just easier. I could go and select pound yen because that's what we're trading, but obviously that's taking me longer. I'll move it in here. And then I'll go back to August 3rd, which is when we started trading this strategy. I'll click on process, and now all the trades that have been placed and then subsequently closed will be called up or recalled, and we've got all the details all the way. Well, obviously there's the security that we're trading, the deal formula, which is part of the algorithm that is running this particular trade, whether the trade was long or short, the size of that trade, what time exactly it opened to the second, at what price that trade opened, when it closed, at what price it closed, what the profit was in terms of pips, what the total price or loss was in terms of dollars. Then we have a function over here that or column that tells us which open deals window this particular trade came from. As you see, this is number 5. Most of these are number 1s. And then finally, we have the function that caused this trade to be closed. Now, not every trade that you see in here is profitable, because what I mentioned before, what we do, we create sequences, and the sequence could have 100 different trades, and 50 of them could be profitable and 50 of them could be losers. But if the aggregate or the sum of all those trades is $2,000, then the $2,000 will be added as the entire trading sequence, and it will be a profitable trading sequence. We don't care how many trades we lose or how many trades we win, as long as we win overall. And that's basically the way this thing happens. So we see over here down at the bottom, this is the summary of all the trades. So since August 3rd, we have opened and closed a total of 3,288 trades. With this particular strategy, that was a total of 32,280 mini lots. That was a total pip profit of 109,990 pips. When you translate it into dollars, it would be $104,184.38. So you've got the entire history over here. In fact, we can sort, each column can be sorted from the lowest value to the highest value, or vice versa. So if we reverse this and start looking at when the first trade was open, we see right here the first trade was open 8/3/2014. So let's just track it down how it was, how this strategy was closing trades. So basically, we've got a first global close. That's when we have a global close, that means that all the trades in that trading sequence have now closed with the profit. Now, there are some losers right here. There's a loser minus 75 pips, but for the most part, there's some losers over here. It doesn't matter. But when we add up all the trades of that sequence right here, then up until here, actually the first global close ended on the 5th right here. So this was the first sequence from the 3rd to the 5th right there. I highlighted them all. There's plus minus $2,000 or so. So the next global sequence that was closed was this one, from here to there. And that was roughly about $2,000. Well, there's slippage in the market, and you've got a lot of positions. If the market is moving fast, then it doesn't necessarily have to be exactly 2,000, because we close these positions with a market order. And those of you that know what I'm talking about, we could get filled by the broker plus minus 5 to 10 pips anywhere. So our next global close would have been first trade after that sequence to the last trade of the next global close. That would be here, and over here we've got a little more. So basically here we've got about $104,000 in profits. Now, don't count all this. If you wanted to liquidate this account, you have to take also the open trades into consideration. Currently, the open trades, this particular sequence, has a total of negative $27,500, which doesn't mean that you're down $27,500. You're down only about $14,000, because we've got on the summary line down here, we've got a function or a variable that changes actually in real time, and we're looking at this in real time. This tells us that the profit needed to close all deals is $16,426. Now, to close all deals means that we would be making a $2,000 profit. So when you subtract 2,000 from this number, we're $14,000 down on this particular trading sequence. The market hasn't necessarily been cooperating, but it's okay, because exactly what has happened all along here, you know, since the last global close. I'll find it here in just a second. Well, there's been a lot of trading since the last global close. The market, okay, there it is. So this was the last global close on the 2nd of October. So the first trade after that is part of the next trading sequence. So since the last global close, as part of this existing current trading sequence that we have going right now, we have closed a total of, here we go, $13,111.16 in profit. So this is already banked. Now, we still have some a little bit of direction or a little bit of profit to go, because before we capture this $2,000 profit, but that explains the difference between the existing trades that are open that are minus 27,000, but us being down only 14,000. And as the market moves up and down and up and down, this type of closing and taking profit from the live market will be going on until the gap between the total negative that we're carrying to the close all deals needed, or to the profit needed to close all deals, will be brought down to zero, at which time doesn't matter if it is 50,000 minus or 5,000. It doesn't really matter, because when you add them all up as the sequence, we've made $2,000. And to illustrate that, I'll just go to the last global close that we had down here. There we go. So if we highlight the total global close on the 2nd of October, when this sequence got closed at 6:10:37 p.m., then we see that this series of trades is actually minus almost $2,200. So, and a lot of people look at that and say, oh, I just had a global close and it was negative. Well, it wasn't really negative, because if you go to the last global close, which is down here, then you see that you were up $2,900 altogether, right? So what I want to do here, Bobby, I'm going to pause for just a second, maybe give you an opportunity to ask questions, or if there are questions this far, and you know, we'll answer a few questions. And then what I want to do after that, I will show you in a time lapse how all this happens, you know, so that you can really appreciate the trades being open, and you'll see with your own eyes how the mechanics work. How's that?
That sounds great, Joseph. And there's only been a couple of questions thus far. One is, if you'll keep that window open that you just had open, the open deals, that would be great, because it addresses either one. If you look under the deal formula,
right?
There we go. If we look under the deal formula, Joseph, you see those parentheses with the numbers, the T, the 70, 50, 10, 5. What does that mean?
Well, it's part of the algorithm. It's a shorthand for the algorithm that we create when we create the strategy, and it's basically how the individual trade is going to be managed, how many pips it has to move before it's protected, and how it is being trailed, what the profit target is on each individual trade, and also the size of the trade. In order for you to better understand, let me go into the harvester, right?
Yes.
And let's go into the actual trade. This is I'm highlighting the actual harvester, the algorithm. The deal formula is actually defined right here. Now, the deal formula is only a small part of the entire algorithm. But if you click on this window right here, double click, a deal formula window will pop up. And basically what you are seeing is the the variables that we change as we input the numbers or the values for the deal formula. So the first number is number of mini lots. In other words, size of the trade. And that's this number right here. That's the first number. That's the number there. That's where we put it. 10 mini lots. We're trading 10 mini lots. The next value is pip profit on individual deals. In other words, what do we want if the market goes in our direction with this particular one singular trade, what type of profit we would want to take? Well, in this particular case, it's 1,000 pips, right? So we're going to take a 1,000 pip profit, and that's the number in the first set of brackets, right? In the round brackets.
Mm-hmm.
Now, next, the market is going to move 50 pips before we protect it with a protective profit stop. And that's that number right here. And it will be a trailing stop. See the trailing? The trailing radio button is chosen. That's what the T stands for. And then we're going to create a stop gap between the market and our trailing stop that will be 40 pips away from the current market price. And that's what that 40 is. And that's this 40 right here. Now, as far as how we're going to trail, that particular trade is 10 over 5 means that every time the market moves 10 pips, then the trail or the trailing stop will be moved 5 pips in the direction of the market. So in other words, it will be increasing our minimum profit on that particular trade, right? So let me just go and create one for you so you see how this actually happens, right? Let me create just, pick one out of the air. Let's just go and trade, pick a pair. You want to trade euro dollar?
Sure, let's just stay with that. That's fine.
All right, let's go trade euro dollar. So we'll pick euro dollar as our symbol. This is our currency pair we're going to trade. Now, the market's going down, so let's just choose the sell operation. How do I know the market's going down? Well, I will look into the TS matrix, euro dollar, and what I'm interested for the most part is the daily arrows and the weekly arrows. Now, if that changes, it's okay because I'll have another algorithm in the opposite direction. So this will be a sell. Then I will create a trade interval. And trade interval simply means that I will not be able to have any more than one trade within 10 pips of the price, so that the trades are not being crowded on the same price. I want to spread my trades around. Then I will assign a value of how many of these trades I will place at any given one time. Now, if the market continues, I can leave this field open and say continue placing unlimited trades and have them ready, have 5 orders ready at the time, or I will say these initial deals only, which means that I will not be allowed, or this particular algorithm will not place any more than 5 trades. The 5 initial trades that will be 10 pips apart, right? So then I've got a whole lot of other functions, the most important one being the recovery. Let's just say I will take a zone recovery for this particular trade. I will check this box and I will set up my zone recovery, and I'll say that if the market goes against me, that's my zone, 100 pips, and then I want the market to go another 100 pips to make 100 pips. That will be my profit target for my trouble. And then my approximate spread and fees for this particular market is 3 pips in this market. I'll just click calculate. Now, I will determine how many legs for my zone recovery I want, and I will delete the rest of them like this. So now I have 2 legs, and I'm protected on both sides. And I'll click OK, and now this zone recovery trading algorithm is built in. Okay, Now, also, I'm not going to be restarting this trade or this particular algorithm. This function allows me to restart this particular algorithm or any other algorithm. In other words, if this algorithm stops, then start another one or start the same one. I will set a profit target for the entire group of trades that this algorithm will create, and let's just leave that at 3,000 pips, and I'll say if the market reverses 50 pips, then let's just stop with this algorithm and restart it when the conditions are right again. And now I'll go into the deal formula, and I'll just say that let's trade 5 mini lots, and let's target 500 pip profit. We'll protect our trade after 100 pips. We'll do a stop gap. We'll put the trailing profit stop 50 pips behind the market, and we'll trail it 2/1, which simply means every time the market moves 2, our trailing stop will move 1. So I'll click OK, and then will add this algorithm. Well, I didn't specify my market move, and that tells me, you know, it's kind of smart. I forgot to specify how much the market needs to move in order for us to trigger, in order for the algorithm to trigger the first sale. Let's just say 5 pips. Okay? So I'll just add that algorithm, and there it is. And there is your shorthand for what we just created. So I don't have to, then I don't have to open this window for me to know how it is set up. I can just look at it and I know what's going on, right?
So basically that deals window that you just closed out is nothing other than a confirmation of everything that you have just created.
This window over here, the
yes.
deal formula window?
The
yes,
deal formula.
That's where I created. I cannot write it in this line. Where
right.
This is the exact same shorthand as it is down here. This is telling me what it is in this window.
So
right?
it confirms. I love that.
This window would be in my way if it was sitting over here. It'd be covering everything else. And really, I want to be, when I'm putting the values in, I want to know what I'm doing. I want to know which value represents what, because I could make a mistake. I could say, I could forget that the squiggly bracket is not for the stop. The squiggly bracket is, say, for the zone recovery, okay? Which for the zone recovery, that's the square bracket down here, right?
Got it.
And if you're wondering where that 100 came from, and that is our profit target, 100 from the zone recovery that we set up over in this window, right? So now here it is, and if we wanted to start trading, we will either set up, we need to set up some type of an event that will cause an action, and basically we'll start trading. Or we can do it manually. It really depends. There's 38 million different ways of setting this thing up. Now, the good part is that once you have this set up, right? Once you have this set up, you do not need anything else. You just simply allow the advanced setup to start the trading process, and it will just keep on trading until you decide to stop it.
Excellent. Now, Joseph, I'm going to take you down a bit of another rabbit hole, as we just went through what is in the parentheses in this window. What do the parentheses represent in the harvester window? Is it the exact same process?
In the harvest, well, we are in the harvester window right here. This is the harvester window. So basically, we're looking at the individual algorithms, and as you can tell, that the individual algorithms have different parameters. See, this one is 10-3000, T7050, 10-5, whereas this one is 10-1000, 50-40, 10-5.
Gotcha. Mark Toner, I certainly hope that that addresses your questions. Please hit me back in your questions window and say yes, or let me know if there's any additionals that you need. With that said, let's see, Joseph, there are a couple other questions here that I feel are definitely very worthy. Does each trading strategy have a minimal capital required to trade them? And if so, what are they?
Oh, that's a long answer for that question. But it really depends on the aggressiveness of the strategy. Some strategies are more aggressive than others. Some are more conservative, obviously. The rule of thumb is that we are targeting about anywhere from 0.5% to 2% of the available capital in the account as our profit target on a trading sequence. And depending on what your tolerance for risk and what your risk appetite is, then we can tailor the strategy to fit your appetite. I would maybe put it this way, and a lot of folks will understand this. Suppose you walk into a casino, and there's blackjack and there's roulette, and those tables, each table has different limit. Mm-hmm. Some tables will have minimum bet $10 and maximum bet $1,000. Now some other tables will have minimum bet $500, maximum bet $10,000. Well, every time you put your money on the table, you are running the risk, hence risk. I mean, the word risk is used in gambling and in trading as well. So you're running the risk of losing that money. So how hard is your heart pumping and beating when your $500 or $5 or $10 is sitting on the table ready to be taken by the dealer? So that's the same way. Let's analyze what we've got over here. Well, we've got we started off this account. We started off right here with a $78,500 account. This is an extremely aggressive strategy because look right here. I mean, the strategy is doing good, but this is not that big of a deal. If we look at the open deals, we're actually right now we're $15,000 down. Right? Now somebody will look at that and say, $15,000, my goodness, how am I going to get out of this? In other words, they do not have very high tolerance for risk. They don't have a high risk appetite. Now you have to understand that your profit potential is commensurate with the risk you are willing to accept. If you understand though how we trade, that we will get out of each and every trading sequence with a profit, it might just take longer, and the peaks and valleys of your equity curve in your account might be steeper and longer. But ultimately, with a more aggressive strategy, you will make more money at the end of the day, not necessarily day, and maybe it will be a month, a year. And with a more conservative strategy, because you cannot tolerate the risk, you will make less. In other words, how hard was your heart beating during this entire process? There
all comes down to emotions, doesn't it, Joseph?
That's right. There is no such thing as no risk, and you know, if everybody wants a strategy where there's no risk, where there's no such thing, because the minute you enter the market, you are risking the capital that you put down. It's like going to the casino. But in a casino, obviously the casino has mathematical odds, mathematical advantages. The odds are on their side. What we have done here is that we have taken the same mathematical principles and we have shifted the odds in our favor in the way we treat the trades when they are placed by the software, right?
Excellent. Well, that was definitely a long answer, but a wonderful one.
Now,
and
I'll add one more thing to it. if you have, say, $10,000 account, for example, and the maximum risk or maximum, we call it drawdown, that you can tolerate in your account is, say, $1,000 before your knees start shaking really, really hard, then you can expect to generate 20%, 24% annually on your account when the market works in your favor. Now, that doesn't mean that every year you'll be making that. Some years you'll make less, some years more. You take 10 years, you average it out, and that's what it will be. If you can tolerate 50% drawdown, then you can expect double your drawdown tolerance in terms of annual return. That's how we base the strat. That's how we build the strategies.
That actually was very informative, Joseph. Thank you very, very much. And Dean, I hope that addressed your questions for you. Thank you so much for asking that question. Joseph, the next question is from Scott Bauer, and he is curious how the broker transaction fees are charged.
You need to ask your broker about that, because I have no control. I don't know, and I don't care. But one thing I will tell you from my experience, it doesn't really matter, because you're not going to change it, number one. And if you have to worry about what the broker is going to charge you, this is not a way for you to park your capital, or where you want to put your capital, because it will always bother you what the broker is charging. It doesn't matter. If you, at the end of the month, are ahead of the game, then that's all that matters. Somebody else might be asking, well, what are the rollover fees? Why are they charged? How are they charged? You know what? For all intents and purposes, it does not really matter, because it's part of the game. You need to pay the piper. That is the cost of doing business, period.
Excellent. Now, there's several people, as we've gone through this, Joseph, we've gone through this in more detail than we typically do this evening. I think we've made a couple of people nervous. They're feeling that they're going to need to know how to go into their software and set up these parameters. Do you want to set their little hearts that are pumping right now at ease?
There is no need to set any parameters. Nobody needs to worry about understanding this, because once you get the strategy going, then the strategy runs on its own. Would you like me to show you how a strategy is imported into your account?
Yes, Joseph, I think that would really help a lot of people. Thank you.
All right, you might have to bear with me, because I wasn't prepared to do this, and actually the strategies that we load are on a completely different machine. This is my personal machine, but let's just go over here and let's pick an account. Let's just find an account. Let's just take this one. All right, here's an account. And let's just pretend it's a brand new account and there is nothing in here. See, all these harvesters are stopped, so this strategy is not running at all. Broker is disconnected, and this is just one of my demo accounts that I try different things. So here's what we want. This is how a strategy gets uploaded. You will click on this button that says load or save complete setup. Emphasis on the word complete. And then we can add to the existing harvesters, or we can replace them. Let's just say we're going to replace them. Remember these numbers here, 621 to 664. So let's just go and replace those, and let's try to find a strategy. It doesn't matter. Let's just pick a $2,000 strategy right here. Well, normally it works. So let's try that again. There it is. So now, did you see what happened? The old strategy got completely overwritten with a new strategy. Now there's a new strategy. The whole thing is set up, including the advanced management. Everything is activated or enabled. The open deals values are reset, and now all you wait for the trigger to start trading. That's it. And from this point forward, you don't have to do anything. And we do actually, as part of our strategy management, we do this for you. We'll upload the strategy that best suits your account, the size of your account. Right? So
That's
if we
excellent, Joseph. That's excellent.
Let's just say that now you change your mind, you want to have a different strategy, or you added money to your account. Let's just say you added. So if you notice over here, this is a $3,000 strategy, right? You see this, 3,000. It's a moderate. So let's just say that now you have a $100,000 account. All right, let's try that. Sometimes it takes a couple. This is not the machine that is designed to do this. But,
and I know you've got several of them in your office, Joseph, so I do understand that.
There, see that? Now you've got the completely different formula. And see, this is now it's a $100,000 account. Everything's set up. And let's look at in open deals, same account in open deals. What's your profit target? See, your profit target in this one is $1,500, and it was $60 before. Right? So that's how it happens. So we've got a library of these files that basically we just upload into the software. Now, what I am looking forward to is one day when people smarter than me will figure out a better way to trade than what I'm trading, and they'll be amongst themselves selling these strategies on eBay.
There you go. Yeah, right, Joseph. You know what, Joseph? Mark Toner, who asked the question about what was in the parentheses, apparently the question was a little different than what I asked. He asked if we could maybe go back and address his question. In the harvester ID, where it actually shows the ID, like the ID for the harvester is 621. In the brackets next to that, it says 1,015 on the left of that. What does that 1,015 mean?
That is the number of runs that particular harvester was activated after it was stopped. So when you receive, if we go to that account, I don't know if I still have it open here or not. Let me find it. See, when we loaded the strategy, obviously a different ID number of the harvester, but you see the brackets, all the brackets have 0. That means that the strategy hasn't ran yet. So if I start it, there's limited. I can't start it because the market's going down and I'm trying to do a buy. Let's see if I can do it down here. There's some limitations. I'd have to analyze the strategy. But if I start it, and this strategy starts, this algorithm is enabled and starts running, the status is changed from stop to running, then you will have the value 1. The 0 will change to 1 because the harvester ran one time. And then when it stops, it stops. But when it gets restarted again, it will increase the value by 1. So every time it runs or every time it restarts, it adds 1. It increments by 1. So if you've got like we had in this particular strategy, we have harvester number 621. That means that it ran and it's running currently. It ran 1,015 times since the beginning.
That helps. That certainly helped me tremendously. And Mark is online, and he says, thank you, Bobby. I get it. Very good.
When I go back and look at my closed deals, right? I can identify, or I can sort my harvesters by the ID, and I basically see which run created that trade, which run of the harvester, right? Goes from 0. Now, when there's a 0, 0 is a harvester that gets, 0 is a trade that gets created when the harvester is not running. Now, how is that possible? Well, that's possible simply like this, all right? So remember we created that euro dollar educational harvester over here. Let's open the working orders, all right? And let's start this harvester. This harvester is set to run with one trade, but I'll show you. This will take maybe 30 seconds for you to understand what I'm talking about. If I manually started, now it is running. So the market will have to move 5 pips before a trade is placed. But what I'm going to do, I'm going to stop it, and I'm going to change this parameter to just 1, which is a market order. And I'll edit it, and now you see the starting price changed from -5 to 1. And this means that when this harvester starts, the software will place a market order, and the trade will be open immediately. It will not wait for a confirmation in the price of the market. So let's start it. We place that trade, and there it is. It was placed. Now at the same time, there's some additional trades that we should find in here. Now also notice how that ID number or the number behind in the brackets behind the ID number is now incremented to 2. How many times did I start that harvester? First time I started it, then I changed my mind and stopped it, right?
Mm-hmm.
Right? So that's why it says 2. This is the second run. And here's the trade that was filled. So we've got a trade that was filled, euro dollar. Let's go look into our open deals. And there it is. It has the same, it has the time, depending on where you are, but my time is 7:34 p.m. The trade was open at 7:33 p.m. and 18 seconds. This is the deal formula, which is identical. There you have it. That's the price at which it was open. I didn't even know this was the price, but it doesn't matter. There's our profit target, and that comes out of here. And basically, this is our profit. We're down $10. Well, I mean, we just opened that trade, and here it is, harvester ID, trade created out of the second run. Now, there are harvesters. Let me stop this harvester right now, and when I stop the harvester, this trade will become an orphan because the harvester that created it no longer runs, right? So let me stop it. There it is, stopped, and there it is. It turned red. That was pretty quick. Now, why is it red? Because its parent harvester that created this trade is no longer running. Now, I can change this trade or this harvester to, if I remove this zone, I'll just use simple trade recovery, and simple trade recovery will allow me to place 5 trades. All right, I'll do my edit. Yes. That's my safety zone.
Mm-hmm.
Okay, so now I edited the harvester. Now it's using a different trade recovery. It's not using a zone, And when you're using a harvester that uses a zone, you can only place one trade because it's a very specific and fairly sophisticated operation to do the zone. If you're doing the simple trade recovery, you can place as many trades as you want with that one harvester in one run. So let's just run this one again. All right. Now see 1, 2, 3, 4, 5 orders are being placed, and the distance between them is 10 pips, and that's the representative of the trade interval. So I do not want to have any more than one trade within a 10 pip trade interval. That's why my first trade will be placed right on the money, right here. Then the next trade will be 10 pips away from it, and next trade will be 20 pips away from it, from the first one, and so on. Now note these numbers. Each one of these orders has a negative sign in front of the offset. Offset is the distance that the market has to travel before the next trade is placed, and that's minus. And the reason why minus, because we're selling, we're not buying, so market is going down. So that's how that works, right? And this trade is not being placed currently because it is limited by its trade interval. The trade interval, we already have a trade that is 3 pips from the market right now, 3 pips away from it. So this trade will not be placed at all, because we already have one there, and those are just safety features in the program. But as the market moves further away from this number, these trades will be executed unless we stop it, as we did right now, and they have been canceled.
Well, Joseph, oh, I'm sorry. I was going to say we've been on. Go ahead. I'm sorry.
And now you see the number in the brackets incremented by another one because I had started and stopped the harvester again, and that's the 3rd time, right? So now we know that this harvester ran 3 times. Whether it places an order or not, the harvester is always on standby to do what it is asked to do. And now we don't really need this trade over here. I'll just go ahead and close it. There, closed, and in fact we'll have it in our closed deals right there. Euro dollar, it was closed manually by the close selected command. It cost us $5 for that experiment.
Excellent, Joseph. Well, we've been on the call now for about an hour and 10 minutes, so God bless and good fortune. This webinar is officially over. Joseph, thank you again.
Thank you, Bobby. Good night, everyone.